Hey folks, welcome back to another episode of T2 SFC Trader. So in this video, I'm going to explain the price action, Friday price action from Nasdaq. If you can watch this video until the end, that means if you study this video with notes, I promise you brother, you'll be able to trade every single Friday. And most of the Friday, you will understand that what you are looking for. So over here, I will give you the true opinion and the real way how to trade Friday price action. Before going to this video, I really would love to request you to give me the thumbs up and subscribe to my channel if you are new, as I am providing you the most valuable information about the ICT concepts. That's my promise, brother. Okay. If you want to challenge me, watch the video, then come back to me and challenge me. At the same time, if after watching this video, if you have any kind of doubt, don't forget to let me know in the comment box. So let's go to the video. So in Friday, what you should look for at first, you should look for the high that has formed before Friday. That high can be created in Thursday, Wednesday, Tuesday, Monday or Sunday. That means this week highest high. You should mark it before Friday. At the same time, you have to mark the lowest low. Any days it can be formed in the chart. Just mark the lowest low and the highest high. Then you will see where the price exactly. Now, as price is very near to the highest high, so I will just give you the explanation from this highest high. And if you see that market is in the very near to lowest low, then you will think it vice versa. In Friday, you should think that market should come back again. If it went above or below the range, weekly range, then you will think that market will come back again into the range. Okay. So as you can see, first market went above this high. So what I should think over there, that market will come back again into the range, that means below that line. Then market went one more time over there. I will think that market is going to come back again into the range. From where exactly it will go, it will come. Obviously, you have to look for some kind of bearish fair value gap from 15-minute chart. That can be the last fair value gap. That can be the anti-fair value gap. Okay, any of those, it can be. Now over here you can see this is the new week opening gap I have from Sunday. So if I would love to look for sell, I have to wait to see that market has broken this new week opening gap low from 15-minute chart. Now if you don't have the new week opening gap, what you are going to do? You will look for the bullish last fair value gap from 15-minute chart. From 15-minute chart, bullish last fair value gap or the anti-fair value gap. The most importantly, you should look for the last fair value gap. So you will use this new week opening gap concept by last fair value gap from 15-minute chart. If you don't have the new week opening gap, you will think like that way, the bullish last fair value gap. Okay? As I have the new week opening gap, I'm just gonna explain with the new week opening gap. So as you can see, market came until that area, tap to the new week opening gap low. Either way, there is no new week opening gap, there should be some kind of last fair value gap. So if you see that market tap to this last fair value gap low, then it went higher. Now you are not going to look for sell. Why? Because the last fair value gap or the new week opening gap is actually holding the price. It is holding the price. That means you should look for buy. Now why you should look for buy? Because market is very near to that high, that weekly high. So it should stay inside this range. So why you should look for buy? As you can see, market actually closed above this new week opening gap high. When it has closed above that high, that means market is telling me that I'm going higher. It's just simply telling me I'm going higher. So I am going to look for buy only. Exactly from where? The best area is above the new week opening gap high. That is the best area, or around the new week opening gap high. You should not push your button when market is below this new week opening gap high. In my opinion, or my strong advice is, when market is inside this new week opening gap, please don't push your button. Don't trade around that area. When I'll be in 1 minute chart, everything will be much more clearer. Just right now, you should remember from 15-minute chart is, as this new week opening gap is holding the price, you should not think that market is going to fall. Instead, you should look for buy, and obviously that buy should have created either at the level of this new week opening gap or above the new week opening gap. Okay, if there is the last fair value gap from 15-minute chart, no new week opening gap, in that type of situation you will think the same thing, that you are not going to trade when market is inside that last fair value gap from 15-minute chart. Instead, you will look for the buy when market will be above the last fair value gap from 15 minute chart. Okay. Now, as you can see above this new week opening gap, I have this bearish last fair value gap that is specifically from 15 minute chart. What I'm going to think, it is going to hold the price? No. How do I know that it's not going to hold the price? Because just above this last fair value gap, there is no buy side liquidity. Sorry. From 15 minute chart, there is no buy side liquidity. What is the buy side liquidity? Relatively equal highs. I don't have that. Just above this last fair value gap, I don't have that. So simply when this new week opening gap or the strongest bullish fair value gap, the new week opening gap is the strongest gap. When this gap is holding, comparing with new week opening gap, he is very weak. He's very weak. Maybe you don't have the last fair value gap, bearish fair value gap over there, then you don't need to even think about this information. But if you have that last fair value gap from your chart and you saw that there is no buy side liquidity just above that last fair value gap or the bearish fair value gap, you will simply think that market is going through that last fair value gap and it is reaching for another level. So I hope that until now everything is clear. If everything is clear, I'll go to 1 minute chart. Remember, I am just looking for buy, and that buy should be created above the new week opening gap. Until price is inside this new week opening gap, I'm not going to do anything. So let's go to 1 minute chart now. So there is my 1 minute chart, and market has opened around 9:30. So this is the 9:30 where market has opened here. Okay, this is the 9:30. So after that, first what I'm waiting to see if market can close above this new week opening gap high or not. Okay. At the same time, this is the first fair value gap after 9:30. After 9:30, the first fair value gap is always important. Mark that fair value gap and extend it to your right. Every single time market will be here in this first fair value gap after 9:30. You will see you will get some kind of reaction to that specific fair value gap. Now, very recently, I have started to talk about this one, and I'm showing this in live and also by making the video. You please do the same thing. That is, please do the journal and see is it really helpful for you or not. Okay. So when market came here for the first time, market came above this new week opening gap. What should you look for? Market will take some kind of liquidity, then you will get a market structure shift. There will be a fair value gap. This fair value gap will be situated at the level of new week opening gap high or above the new week opening gap high. Okay, if the fair value gap is below the new week opening gap high, you are not going to push your button for the buy. At the same time, you are also not going to take sell. If you take the buy, how far you should hold the trade? See this yellow line? That is the last high before Friday. That is the high. So until that high, you should think that market is reaching for that high. At the same time, if you see there is some kind of relatively equal highs from 1 minute chart or maybe last fair value gap from 1 minute chart, or around the around that high, there is some kind of relatively equal highs. So as I can see, I have this relatively equal highs, and that's very clean, very perfect, relatively equal highs, very smooth, relatively equal highs. I'll just mark that on as my buy side liquidity. Also, this is also the buy side liquidity. You can also mark that on if you want. So here, when market came here after 9:30, did it take the liquidity, sell side liquidity? No. Even if after taking the liquidity, did it give you the market structure shift? No. So you don't have any opportunity to take buy over that. Market came back inside this new week opening gap. How far market will stay in this new week opening gap or new day opening gap? Don't try to push your button. Inside this range, please don't trade. Okay. Then finally, market came here where to that specific fair value gap from 1 minute chart after 9:30, the first fair value gap. At the same time, it has traded the constant crossment, the 50% of that new week opening gap. Tapped over there, went higher again. When market went higher again above this new week opening gap, what I'm looking for, the same thing. Market will take some kind of liquidity, then it will give me the market structure shift. There should be some kind of immediate reaction. I will take the buy. Where is my buy side liquidity? This is my buy side liquidity. Now let's see what happened over there around, or what time is it? Around 11:06. Okay, so market has taken this low. That means I saw that market has taken the buy sell side liquidity. Where it is taking this sell side liquidity above new week opening gap high. Is there anything that is stopping me not to take that entry? No, there is nothing. So simply I can look for the setup over there. Then I got this market structure shift. Was that a very nice market structure shift? Immediate reaction after taking the sell side liquidity. Everything was perfect over there. Every single thing was perfect over there. Okay, so that is my market structure shift. Here is the fair value gap. So I'm going to mark the fair value gap only. there. Okay, and I'm going to remove this 15-minute bearish fair lookup because I have explained why you should think that this bearish fair lookup is going to be broken. So I'm not thinking that this bearish fair lookup is actually holding the price. Okay, and as you can see that it has been rejected to the top of this bearish fair lookup, but I don't care about that. I would love to see that it will go through this. Okay, this is sometimes shit happens. Sometimes shit happens. So after that market structure shift, when it was the immediate reaction, I will take that buy with confidence that market is reaching for at least this buy side liquidity. At the same time, and where I will put my stop loss, the candle which has made this bearish fair value gap, so bullish fair value gap. If you have seen that there is a breakaway gap, just cover that breakaway gap. Let's just cover that breakaway gap, or the candle has made that breakaway gap. Target over there. What is that entry? A perfect entry. Okay, there should be some kind of perfect entry. This is the perfect entry. Oh man, the perfect entry has been fallen and you got stopped out. Don't cry. If you work with the same logic, I am going to prove you will be profitable. I am going to prove you. Okay, just wait little more. Don't get panic. Yeah, the perfect setup that didn't work over here. Just remember, when market is inside this new week opening gap and the new opening gap, if there is new week opening gap, new opening gap, don't try to trade in how far market will stay over there. When it will, go outside of this area, if it went higher, then you will start to look for buy. If it went lower, then you will start to look for sell. Okay, so you can see that you got stopped out over here. So near about 21 handle, you got a loss of 21 handle. If you think that 21 handle is not worthy to take, then don't take that trade. There's nothing wrong. Don't take that trade. So then market went lower again. Where did it came exactly? Let me show you. Okay, let me show you. Just let me remove this one. I was in live, so I was talking about this price action. Where did it tap? To that specific fair value gap after 9:30, the first fair value gap. It tapped to the high of that specific fair value gap exactly over there. Then market started to go higher. There was a market structure shift. Maybe there was a fair value gap. Are you going to take that buy? No, I wouldn't go for that buy. Why? Because still this is inside this new week opening gap. Okay. Then and also this is inside the lunch hour. So from 12 to 12:50, this is the lunch hour. Then market finally came here, went lower. What it has done? It has taken this sell side liquidity. Look over here. It has taken lot of flows over there. So it has taken this sell side liquidity, all of this sell side liquidity. What else do you see? To that specific leg, from there to there. This is the specific leg. In that leg, where is your first fair value gap? Just mark it. Here you will see this is the first fair value gap. What is that exactly? The last fair value gap. To that specific leg, look. There is no other fair value gap. This is the last fair value gap. If I stepped over there, are you going to push your button over there? No. Why? Because market is inside this new week opening gap. It has taken this sell side liquidity inside the lunch hour. Still market is inside that lunch hour. Where the lunch hour is going to end? Around 12:50. The 12:50 is the time where the lunch hour is going to end. Now, if you don't think that you are not confident enough to use the 12:50 macro, or you don't believe the 12:50 macro, then wait at least until 1. Okay, at least until 1. Just skip this buy. Don't take this entry. Okay, so it has taken this sell side liquidity. This is the market structure shift. Look, after taking the liquidity, tapping to this last fair value gap, boom, a sudden move. Okay, and a very nice displacement. There is nobody who is telling that, who can tell me that this is not the displacement, this is not the immediate displacement. Now you can refer this bearish fair value gap from 1 minute chart, the last fair value gap. You can refer that, brother. It is actually trading this last fair value gap, then it will fall again. It can happen. It can happen, but you know from your 15-minute chart that you are actually looking for buy, because market has broken this new week opening gap by lot of time. It has been broken. It didn't show you that it wants to go lower. You have seen that market has been rejected exactly from the new week opening gap low. Tap to this new week opening gap low, then whole day market is actually going higher. So when you got this market structure shift, where is your fair value gap? Let me mark the fair value gap. Okay. Now, is this fair value gap below the new week opening gap? Absolutely not. This is not the fair value gap which is below the new week opening gap. Look, it is around the new week opening gap. if you would love to push your button, where your entry is going to be, just above this parabolic gap. Look at this parabolic, just above that parabolic gap. So when you got this market structure sheet, what you are going to do, you are going to push your button when market will tap to this parabolic gap, okay, over there. So to that specific line, where you are going to put your stop loss just below this candle which has made this parabolic gap. You can just cover this volume imbalance as well, because there is a very small volume imbalance. You can just cover that volume imbalance if you want, and yeah, that's all, okay. And where you are going to target 1 minute liquidity, is that your extreme liquidity? Absolutely not. Just target that extreme liquidity. No brother, I don't want to go that far. Okay, no problem. Look, this high and that high, what are they? Relatively equal highs. Just mark it mark it as your buy side liquidity. Hold it until that area. Still, this is 1:3 risk to reward ratio, 43 handle. Isn't it enough for being profitable? Absolutely. No brother, I would love to hold it until that area. Take a partial over there. Must take a partial over there. Hold your trade until that area, because you know market is reaching for that area. From your 15-minute chart, it is extremely bullish. Now, when it has taken, traded until that area, what is your profit? 107 handle. What was your loss? 21 handle. 21 handle. Can you see the same logic here and here? Now, here I was unfortunate and the perfect setup just didn't work. I have been waiting for the same thing. I didn't push my button over there, not there. No, I didn't push anything over there. I was waiting for the perfection. So when this candle tapped to this parabolic gap, what time is it? 12:54. No, brother, I don't want to push my button over there. I would love to push my button after, or at least one. I would love to push my button. Okay, so I'm going to just put it over there, then later I will put it over there. Okay, but you are reading the price, you are seeing that market has taken that liquidity. This is the market structure shift. Market has traded into this parabolic gap, that specific parabolic gap. It has traded over there, then market started to go higher. Okay, it has started to go higher. When it has started to go higher, what you should look for at first, the order block. Now, as you can see, this is your order block. Let me mark the order block over there, that area. This is the order block. I would love to mark that order block over there. Now, why I'm marking this one right now? Here, this is your real order block. This is the consecutive order block. This is your real order block. But I'm just saying you that maybe you didn't push your button because it was before 1:30, before 1. You don't want to push your button around 1, or around the macro 12:50 to 1:10 macro. You would love to wait for the 1 p.m. exactly. So you have seen that setup has created over there, but you were not confident enough to push your button. You were waiting for that 1 p.m. candle. This is that specific candle. Where this candle came to that order block. Look, this is the order block. It tapped to this order block. So took your buy over there. Just took your buy from that order block. Put your stop loss just below that order block. See, this is the order block. You put your stop loss below that order block. Same target over here, around that area. Just the same target. Or if you are overzealous, you can hold it until that rate. This is the extreme liquidity, brother. You can't do that. No, this is not the extreme liquidity. This is 1 minute liquidity. See, this is just 1 minute liquidity, not the extreme liquidity. You don't want to hold it until that area. No worries. Above this relatively equal highs, you just hold until that relatively equal highs over there. See, this is also relatively equal highs. Hold your trade until that area, or maybe this last parabolic gap, or maybe that last parabolic gap. I don't know where you are going to hold your target, how far. If you know where market is reaching for, as I told you that when market will, in my life, I told that this bearish parabolic gap, which I have been removed from my chart, it will go through that and it will trade that parabolic gap. Until that parabolic gap, I'll be bullish. I don't care what is happening over there. In my life, I told you beforehand that please don't push your button when how far market can't leave this new week opening gap. Inside this new week opening gap, always you will be frustrated. Always you will be frustrated. Then wait, this was the perfect setup in the morning session. Yeah, it didn't pan out. Sometimes shit happens. The perfect setup didn't work. I'm working with the same logic over here. The same logic. There is nothing different. then it happened. Okay, so it's up to you which one you would love to take entry. Just took the entry. Now market went higher. Where did it came? Where did it came? Now let me actually go back to 15 minutes one more time, because I have to I need to explain this one. Did it came to the constant crossment? Yes, brother, but it went little higher. I don't care if it failed to tap to this high, or maybe very near to that high. I will see this is the constant encroachment rejection. The constant encroachment rejection. If I see the constant encroachment rejection, do I need a bearish fair value gap? I don't think so. I need a bearish fair value gap. So I'm not going to wait for the bearish fair value gap. I'll be in 1 minute chart. I saw that market went higher, then went lower, went higher one more time until this constant encroachment, then boom. Sudden drop gave me the market structure sheet over here. Who has the confusion about this market structure sheet? Who has the confusion? Tell me. But what is the logic for taking sell over here, brother? Remember the high. Whenever market will go above this high, just let me go. Whenever market will go above that high, it will come back again. Where? Inside the range, weekly range. Always, not always. Sometimes shit happens. Okay, sometimes shit happens, man. Sometimes it happens. That was a very nice market structure. Shit. Did market left it buy sell liquidity over there? No, it didn't. Exactly, no buy sell liquidity over there. This is a very nice displacement. Where is your fair value gap? Where is your fair value gap? Do you have any high time frame level over there? Absolutely, the 50-minute candle. Sorry, bearish fair value gap. Obviously, the 50-minute last fair value gap, and obviously it has been rejecting from this constant crossment. Everything is in line. So what you are waiting for, brother? What you are waiting for? Just tap over there, took your sell over there. So let me mark it. Took your sell over there, put your stop loss, which has built that the candle which has made this bearish fair value gap. This candle, put your stop loss above that one, 1900. Still, it is bearable. How far I can go? I'm going to hold my trade. Look, is there any relatively equal lows? I can see there is a relatively equal lows around that area. Okay? So this low, that low, there are relatively equal lows around that area. Hold it until that area. It is also inside this range, that is below that line. It is inside that range. But brother, the risk reward ratio, I'm not happy. It's 1:1.7. I'm not happy. Okay, then took the partial over there. Just take a partial over here. Hold your trade until the last fair value gap. Where is your last fair value gap? This is your last fair value gap. So let me mark the last fair value gap around that area. So this is your last fair value gap. Okay? Hold your trade until this last fair value gap. As you don't have any other sell side liquidity, that means relatively equal lows. But brother, it never come to this last fair value gap. It never come. Trail your stop loss. Get stopped out here somewhere. Here somewhere, just get stopped out over there. Anywhere. Exactly where did it came, brother? That entry fair value gap. Some kind of entry fair value gap over there. Just let me mark it. See this entry fair value gap over there above the last fair value gap? Is that random fair value gap? No, absolutely not. It is very specific fair value gap. Look, it tapped to this entry fair value gap. Very specific fair value gap. To that specific leg from there to there. This is the last fair value gap. This is the entry fair value gap. There is no other fair value gap below these two fair value gap. Don't believe me? Look by yourself. Tap to this entry fair value gap. Then either way it has been consolidating around that area. Then it come back again over there. Then the way it has been completed its day, I don't know. Maybe you got stopped out over here, okay, around that area. So that was your trade until that area. Just until that area, randomly, I'm telling you, randomly. 1:2.86. How many handle? 55 handle. Oh man, you took a 21 handle loss. You took a 21 handle loss. 107 handle, 55 handle. Aren't they enough? Are you using some bullshit logic? No. You are using the same logic you are going to use every single Friday. If it works like that way, you will participate in that price action. If it doesn't work like that way, don't participate in that price action. Let it go. This is called precision. Is it hard, man? It's not hard. Everything is up to you. I hope that, brother, this video will clear all of your doubt about the Friday, yes, sometimes you will take this type of losing trade. Sometimes shit happens. But that doesn't mean market is not going to work with the precision. After seeing one losing trade, if you get frustrated, you are not worthy enough. I mean, you are not worthy to trade. Now, do something else. It's my advice. Okay, guys. So if you have any kind of doubt, I believe that you don't have any doubt. But if still you have some kind of doubt, don't forget to let me know that in the comment box. So until the next video, cheers.